Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to go from working that 9 to 5 job to becoming a full-time swing trader. We're going to be talking about the timeline. How long does it take? What's a good strategy? What's a good broker? All the things you guys need. So I hope you guys all enjoyed this. If you do, smash that like button, subscribe. And if you guys want to learn more about swing trading and trading in the market, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. We teach you honest strategies. It's not a get-rich-quick scheme. It's not alerts or anything like that. We teach you how to set up your scanners, how to go about your entries, your exits, your risk management system. So I hope you guys all enjoy it. Check it out down below. And we have a St. Patty's Day sale going on. You guys can get 51% off by using code St. Patrick. So St. Patrick for 51% off. Smash that like button, subscribe, check out our school, and guys, let's jump into this. All right, now everybody's main goal when it comes with trading, whether it's day trading or swing trading, is to quit their 9 to 5. They would love to be a full-time trader because they think it's easy. They think it's this glorious thing where they sit on a beach in Costa Rica sipping margaritas. No. Swing trading, day trading is very difficult. I'm sure you've heard those statistics of 80% or 85% of traders that trade in the stock market fail. But there's also another statistic I want to tell you, and that's 80 to 85% of businesses fail. So what's the approach? Why did I bring them together? Is because trading is a business. Just like a business, you got to have a business model. You got to understand the market you're in. You got to understand what works well, what sells, what doesn't sell, what should you have in your inventory, what shouldn't you have. Trading is the same thing. You need a trading plan, a trading strategy, understand the market conditions, understand what strategies work well, what strategies don't work well, and overall the type of trader you are. And the reason I want to talk about this is because everybody thinks they can turn $100 into $1 million and just retire on the beach. And when in reality, most traders that I personally know work more than the average 9 to 5 job. And you have to have a passion behind it. Now, the reason I say that is because if you don't have a passion, you don't enjoy it, and you think it's easy, somebody else is going to be putting in that work, because at the end of the day, trading is a competition. All right, so what should you do? So if this is your first video when it comes with trading, what should be the approach? So step one, honestly, would be to just consume as much knowledge as you can. The more you learn, the more you're going to earn. And don't expect to fund an account. Don't expect to make any money. Just focus on education. After you guys spend, a couple of weeks, kind of developing what trading style you like, whether it's day trading or swing trading, then I would start paper trading. Paper trading is using simulated money to practice your entries, your exits, your risk management skills, but more importantly, build up confidence and build up a strategy. Now, there's a lot of controversy over paper trading. For me, I think it's 100% useful for everybody, whether you're beginners or even I find myself practicing new strategies paper trading. Now, what paper trading lacks is emotion. So that brings me to step number 3. After you guys paper trade and learn for about a year, and I know it sounds like a long time, but after you do that, then I would start small. Start with $100 or $200 in your trading account and try to grow it. If you guys can be profitable with $100, you can be profitable with $1,000 or $2,000 or $3,000. During all of this time, you guys are going to be journaling your trades and figuring out what strategy works, what doesn't, and I'll put our trading journal down below. So if you guys want to get it, it's absolutely fantastic and it's super affordable, and it's all online, so you can use it both on your phone and on the desktop. Now, after you do this span could easily take 2 to 3 years, and I know it's not easy. It's not a get rich quick scheme. So the thing is trading is just like any other job, a doctor, a lawyer, an engineer. What I mean by that is you got to put in those hours, those months, and if not years of education and practice before you'll see profit. And that's completely normal. So if you're just getting started, or maybe you're year 2 into trading and you're not profitable, guess what? You're normal. You just have to continue to learn and focus on strategies that work and journal those trades. Don't forget, if you want to learn more about trading, check out our school and get 51% off by using code St. Patrick's. Now, after you guys do this, and if that just say now you're profitable with $1,000, what's the next step? The next step is to build a safety net of about 6 months of expenses. The reason I say that is because you never want to be working to actively pay for things like your car payment, your mortgage, your all that stuff. This was a huge transition for me when I made that jump. But one of the things that I did is I had that safety net. So if that just say I knew my car payment was next week, I didn't want to take on sloppy trades and not choose quality and choose quantity because I think I would have to try to make that money back. So having that expense already taken out of, and I'm just building up, a certain dollar amount. So if that just say you have $25,000 in your account, what I normally will do is anything over that $25,000, account, I will withdraw and put it into my checkings account. Another thing you guys really need to focus on is start like part-time. What I mean by that is continue to trade when you have that 9 to 5 job. And the only way I personally would ever quit is if you have money over your 9 to 5 job coming in on a consistent basis. So if that just say you make $1,000 a week at your 9 to 5 job, the only way I personally would quit is if I made about $1,200 to $1,500 a week for about 6 months. And then I would look into quitting. All right, now that we understand the basis, the time frames, what is the best approach and the best strategy here? So I want to show you guys 2 positions that we've taken. The first one here is on VOO. This is the Vanguard S&P 500 ETF. So for me and my approach, you can trade both stocks, ETFs, and I've even seen some people trade Forex and cryptocurrency with it. So the first thing I look for is trends. Trends, in my opinion, are probably one of the most underutilized things traders don't pay attention to. A lot of people and a lot of new investors and traders think you need to get in on a stock on a downward trend because you can get in at a very cheap price, when in reality, what I look for is a stock on that upward trend that has sold off down to an undervalued point of support. So support could be a variety of things. It could be a certain price indicator. It also could be, something like the MACD, the RSI, or you could just take advantage of sell-off. So with VOO, one of the things I noticed is we had that good and steady upward trend, but we had this huge sell-off. This huge sell-off went from near and around the 563 all the way down to near and around this 507 mark. This actually was a huge sell-off in such a short amount of time, where this is why I started to look at this ETF. Now, support. We also love this red line, which is a moving average line. In the past, it's acted as support here, so I was hoping we could get a move going on it. Another indicator I look at is that RSI, which is the relative strength index. And at the time here, it was trading for near and around a 26, when the last time it was trading for a 26 was back in here. And when we saw the stock go from about 448 all the way up to about 440 or 483 in about a month. So now here, let's go through this again. We have a stock on an upward trend, sold off down to that red line, that 200-day moving average line. It's undervalued on that RSI. Now with VOO, we did do something a little unconventional, as we started averaging down as it started selling off, but we recently just went in very heavy on this position because of this breakout here. So removing all these moving average lines, you guys can see this clear and steady trend, where it hits this red line and we have selling pressure, selling pressure, selling pressure. So what we did is we threw an alert above this. So if it started breaking out in that direction, we could get in with a little more volume. And that's exactly what we saw, right? We averaged a bunch in on this first push above this at 511. Now the stock has moved up to 518, which return wise is a little over 1.5%. So this is a simple approach. Now we're letting the stock or ETF just continue to rally its way up, moving, the trend up with it. Another stock here that we recently got on a beautiful trade with was NVIDIA, NVDA. Now, very similar approach. What do we notice here? Right? Stock on an upward trend. It has heavy support here in this range. This one here has something called a support zone. So it has a zone of support. So it hits it. We have great buying pressure in it. It's undervalued on the RSI. It obviously has that good upward trend. And looking at that hourly, right, hits this downward trend, got in on that breakout. Stock's been rallying its way up. We started thinning out some of our positions. We did not sell all of it, but we sold about 70% or so on the breakdown of the trend at about 2150. Doing that had locked us in with guaranteed profits. And so if it does continue to catch fire, we can continue to rally its way up. And we're keeping our stop loss just below our total stop loss, just below here at about 118. So it's been a beautiful trade getting in near and around that 109, pushing up to highs at 123. So this is a very simple approach you guys can do with a 9 to 5 job. You just set those alerts, you be prepared. And the thing is most of these positions we look at on Sunday and we plan out the trade. If the stock does that, if it breaks up, then we're going to get in. If it doesn't, then we're just going to hold off. Being prepared is one of the best things you guys can do as traders. So, check out our school. We go live. We talk about how to find these plays, these strategies, the approach, all of that. So I hope you guys all enjoyed it. Smash that like button. Check out our school. And don't forget, the broker I use is Moomoo. So if you guys want to sign up, I'll put a link to them down below. They're awesome. I absolutely love them. And they're the best broker I've ever had. So smash that like button. And we'll see you guys in the next one. Take care, guys.